Fair value gaps are better known as FVGs. These are areas in the market which are formed after price aggressively moves up or down, making it difficult for buyers or sellers to enter new positions. Inner Circle Trader Concepts, better known as ICT, went viral recently for his trading methods, and fair value gaps are one of the key concepts he teaches. Price action traders speculate that FVGs are temporary market imbalances. This means they think price will come back to that area in order to fill a gap or for the markets to rebalance. As traders, we can capitalize on this by setting longer short entry points within these gaps. Before we can do that, we need to know how to spot FVGs consistently though. To find a bullish FVG, look for this 3-candle pattern. All 3 of these candles must be green, and the middle candle has to be a large gap that doesn't overlap with the first candle's high or the third candle's low. If all these conditions are met, we can draw the FVG zone by connecting the first candle's high to the third candle's low. To spot a bearish FVG, look for the exact opposite conditions. All 3 of these candles must be red, and the middle candle should be a large gap that doesn't overlap with the first candle's low or the third candle's high. We can then draw out the FVG zone by connecting the first candle's low to the third candle's high. It's also important to note that if the wicks of the first and third candle touch the same price points, then it's not a valid fair value gap because the market has already adjusted to those price levels, meaning there's not an imbalance. Now that we have these FVGs marked out on our charts, we need to know how to use them to make some money. When looking for a long trade, you want to wait for a bullish FVG to form and for price to retest or come back down to the zone. If price respects the FVG, you can enter a long position while setting a stop loss below the zone. And when looking for a short trade, you want to wait for a bearish FVG to form and for price to retest or come back up to this zone. If price respects the FVG, you can enter a short position and set your stop loss above the zone. Before you enter a trade with all of your money on the first FVG you see, we recommend using other indicators as confirmation so you don't blow up your trading account. You could use something as simple as the RSI indicator. The SFX algo indicator can also be combined with FVGs to find high probability entry points. You can try it out for 7 days risk-free in the link in my bio. If you enjoyed the video, please like, comment, and subscribe.